All right, Biden overseas, even as his own party doesn't want him to represent Americans' interests. Join us now, Making Money host Charles Payne. Charles, let's talk about these numbers quick, okay? So we ran the clip from CNN, but Joe Biden has a 39% approval rating. 58% blame him for the economy that's not doing well. Yeah. But this is the number that I always followed when I was in politics, right? 45% of voters feel that Biden cares about people like them. That is a horrible number. You want people to know that you're fighting for them, working for them. And if less than half think that you're fighting for them, you're in trouble.
Yeah. And I think what we'll see it is on the turnout, right? You know, they've got this amazing machine where they, cultivate and harvest these votes over a long period of time, unlike in the past when you had to go in the voting booth on the day of voting. That works out a little bit. That might negate this to a degree. But the way these numbers are, and by the way, we're talking about now, think about where we're going. Think about the direction of delinquencies. By the way, under 30-year-olds, their card delinquencies are at a 15-year high. So think about the direction of delinquencies. Think about the direction of crude oil. Inventories at a 40-year low. Think about the direction of everything in this country. It's going to be a whole lot worse as we get closer to the election. And people at a certain point in time, no matter what, like by March, if the economy is worse than it is now, that's it. It could get better after that. It won't matter. And voters will say, okay, right, they're paying $4.20 for gasoline. That's it. You're done.
Yeah, I think Biden's going to have a hard time with the young voters because it's hard for them to buy a house. They're going to have to pay back their student loans. And he broke a big promise there. But Charles, I want to get to this news, too. Apple. Big news out of China this week because they're saying that government workers, people that work at government-backed companies cannot use iPhones moving forward. This really seems like a big test for Tim Cook here. And I want to know what you think. Is it time for Tim Cook to get totally out of China? And what does this mean for folks that are invested in Apple? Because the stock has taken a dip since this news broke, on Wednesday.
It has taken a dip. It depends on where you are. Near term, I think Apple's shares are going to move sideways at best. Sideways at best, probably lose a little bit more ground. Tim Cook has been trying. I mean, you could see this coming. And I think, ironically, this event being held in India, Tim Cook made a real big deal going and meeting with Modi himself. They've already started manufacturing in India. They're doing manufacturing elsewhere. It's a delicate balance because your growth market is China. You want access to the Chinese consumer, but you don't want to be you don't want to be in a position where you can be cut off. And so it's a delicate balancing act for Tim Cook. There's absolutely no doubt about it. But I think the other wild card is this Cold War we're in with China. We're in a Cold War with China that's heating up. And listen, we don't want them to have certain computer chips. And so it's going to go back and forth. It's just, and Apple is stuck right in the middle of that. They're going to get a lot of collateral damage for sure.
Do you think there'll be a ripple effect and they'll broaden this, not just to Apple products, but to impact other companies that do business there as well?
They could. Yesterday on my show, I put a list of the top 30 companies, with exposure to China. All these stocks are down. Estee Lauder, Starbucks, all of these names. Again, it's a growth market. 1.4 billion people, they buy luxury goods more than we buy them. And so it's a growth market, but Apple is more symbolic, right? It's one thing to say, okay, don't go to Starbucks. It's another thing to say cut off Apple. That's a little bit more symbolic. It's a little bit more of a symbol of America's might, of America's ingenuity. That's what you're going after. And, you're trying to punish that and say, hey, by the way, $40 billion this week for a new chip factory in China. So they're trying to counter our actions as well.
Yeah. We have a lot of economic data coming out next week. We'll have fresh numbers on CPI. Markets will be watching that, thinking, what's the Fed going to do? But we're also watching the housing market very closely. And the Wall Street Journal with a piece today talking about the fall in home prices, that we blinked and it might have happened. It may already be over. I've been watching prices really closely. I didn't really see the kind of drop that I was expecting. Yeah. Inventories are obviously very tight, holding things up. So is that where we stand? Is it over?
It's a unique market because a large portion of the population have mortgages under 3%. A lot have them under 4%. You don't exchange a 3.5% mortgage for a 7.5%, 8% mortgage. You just don't do it. You see the kind of house you could buy now. Let's say you had $2,000 a month to make your payments and 20% down. You could 3 years ago you could have bought a $500,000, $600,000 house. Now you might get a $250,000, $350,000 house. So sellers are reluctant, and buyers can't find anything to buy. So it's a hell of a 1-2 punch.
But at some point, that's going to break. Sellers are going to have to sell at one point. If they want to move up, they're going to get
But you don't sell. I mean, if you sell, like, let's say I'm sitting on a house and I bought it 10 years ago. Do I sell, make a big profit, and give it all back in higher mortgage payments over the next 30 years?
Big
Not
down
unless
payment.
you're making more money
Big
or
down
something,
payment.
you had a life
But it's
change,
it's a
right?
huge thing to give up. You know, I mean, listen, if you could buy a house for cash, fine. But if you have to take out a mortgage, it is a difficult decision. This is why we have almost a record low number of people moving for jobs.
Yeah.
People are reluctant.
Do you think
to
this
move.
market lasts for a while? You think we're going to have tight supply?
I think
high interest rates?
I think interest rates have to come down.
Yeah.
I think when interest rates come down, I think the housing market will reignite, so to speak. But right now it's a sideways market, and although there's a ton of homes being built now.
Yeah.
There's a ton of homes in the pipeline right now. That could break it too, maybe over the course of about 52 weeks.
And we know interest rates, I mean, that's anybody's guess, but mortgage rates are not expected to come down for quite some time. It's going to take some time for that to catch up, right?
Yeah. Although I got to tell you something, you know, I think the Fed is going to find itself in a real serious pickle, particularly if they hike anymore. I hope they don't hike anymore. We heard from Susan Collins yesterday, Lori today from the Dallas Fed president. They sound reluctant to go right away, but they also want to kind of, quote unquote, keep the door open. A huge mistake. Again, looking at where things are going, this so-called lag effect, it's right behind us. It's right in our rearview mirror, and it's bearing down on us like a tidal wave.
So I think to your point that you started with about the credit card debt and what we're seeing with the consumer, I think it's taken longer, but people have slowly started to run out of money. They've also started to run out of credit cards to put things on, and that impact is probably going to hit late in the fourth quarter or early next year.
Right.
And then all of a sudden you see the Fed tightening. Wow, here we are. It
That
worked.
so-called excess savings, the $2.1 trillion down to $100 billion. Credit card interest rates on credit cards, 22% an all-time high. Some of these store cards, Macy's came out last week with their earnings. I had no idea. Their card is 34% interest.
Oh, my God.
So, and now we're starting to see the bankruptcies start to pile up here as well. You know, so
They reported a lot of people defaulted. I'm sorry, but they. They reported that. I didn't know they had a 34% interest
Yeah,
rate.
the store cards are but the average store card is like 29%. So.
And this is the economy that Joe Biden wants to run on. Bidenomics, here it is.
He's trying, but you know, it's one you could tell people it's great, but the numbers we're talking about, people live them. They feel them every single day. And by the way, folks are smart. You know how they always say you go to these small islands and you know, these tropical islands, how whenever a big tropical storm hits or something, they look around and the animals had already left. They have an instinct. Households in America have instincts that they know things long before Wall Street economists know, long before the White House knows. We know what's going on, my man. So you can keep telling us it's great out there. In the meantime, we're heading for the hills.
That's right.
Oh, my gosh. Charles Payne, thank you so much for stopping by. Wish we could keep chatting, but the good news is we can all catch Making Money with Charles Payne, 2 p.m. weekdays, right here on Fox Business. So you can see him in just a little while.
I'm talking about nuclear proliferation today. Do you guys know that the Biden administration is funding Bill Gates $2 billion?
Yeah, I was reading about
for
that.
plutonium?
Unbelievable.
Wow.
The same kind of plutonium that's used in nuclear weapons?
All right. We'll catch that at 2.
You got
Thank
it.
you so much, Charles.